Hello everyone and welcome back. Today I wanted to do a live trade review that I took yesterday, being 3/8/2020. So what we're looking at here is on the left hand side of the screen. So this is the E-mini S&P Micro. The symbol, if you're using Think or Swim, the symbol is \MES right up here. That is what I'm trading. If you're trading the regular E-mini S&P, the risk goes up tenfold. Okay, so this is the micro. Everything is reduced 10 times. With that said, I'm trading 3 contracts. I'm not going huge winners and huge losers, but something more sustainable. $150, $200 a day is enough for me. So one thing I want to go over is yesterday's trade. As you may or may not know, the stock market is closed on Saturday and Sunday. However, futures, which is what I'm trading, which is what this trade was on, and Forex open on Sunday night about 6 p.m. Eastern time. So if you have a full-time job and you're just not able to trade during the day on stocks, you can always trade either futures or Forex at night. They run almost 24 hours a day. And they usually close on Fridays about 4 p.m. Eastern, and then they open up on Sunday about 6 p.m. at night. So you can start your trading week on Sunday night if that's something that you want to do. That's something that I enjoy doing, and I try to trade. I can't wait to trade till Sunday. So I want to do a quick trade recap. On the left-hand side, I am looking at the 5-minute time frame, which is here. And on the right-hand side, I have my 1-minute chart, which is here. And what I have closed is usually I have my active trader open on the side as well, so I can trade, I can buy and sell. So when we opened right here on Sunday night, we had a huge sell-off all in about 1 minute. So I actually missed this whole move. Wasn't able to catch this at all. Then I have here I have my zones marked out. If you're wondering what it is, this purple line is the support and resistance area on the 4-hour chart. And these green dots here, this is just pivot points. So if this is something that you're interested in using, you can come up here and just insert a pivot point strategy right from here. Type in pivot. And I just use the regular one. You can add it. And so I mark out my zones. And this is typically how I trade. And you can look and see that a lot of times the market respects those zones, and you can expect some kind of a bounce. Right here, we ripped right through it. We just had a crazy sell-off. But every day I update my zones. I had, depending on pivot points, I update them. So anyways, let's talk about the trade. So this is the 5-minute chart on the left, and on the right, I use a 1-minute chart for my entries. So right here, I missed this whole huge sell-off. Then what we did was we came down, bounced up, we came down, bounced up again, and then we kind of chopped around here. So what happened, and then we sold off right back into this whole area of support, right? This area right here, you could see in the box right here, this whole area is an area of support. My pivot point is here, and then this is S1, and then this is S2. And if we're looking lower, S3 may be down lower somewhere. S3 is right down here, which I know we got halted today, and not really much had happened. And then let's see, and then I think we opened up right into S3, bounced, and then we kind of retraced, and now we're rolling over again. All right. I took another trade right here, but I only got a partial on it. I didn't get my full target. But anywho, I protected my trade for a partial winner. And if you're wondering, I have a bird in the back. He's going to be making all kinds of noise while I talk. He likes to be active. I'll try to cut him out of this video. So right here, I'm watching the market come down. And let's see where we are. I have the crosshairs synchronized on both sides of the screen so I can see exactly what's happening with the market. So if we look, I was watching the market come down. And so we came down here. We were kind of chopping around, right? We're chopping around here. Then when we started to come up, I was watching this area because of this white dotted line here. This is the VWAP line. And VWAP stands for volume weighted average price. And I wanted to see how price reacts on that VWAP line. So what I was looking for is some kind of rejection or a break. So let's, right here on this candle, this looked very bullish. I was assuming some kind of a break and a retest, and then a possible entry that away. But we didn't get that. What we got was a doji candle right here. And if you know what a doji is, by the way, this is the same thing, the doji is right here. The combination of 5 candles on a 1-minute chart will equal 1 candle on a 5-minute chart. So knowing how to read candles and how to combine them can tell you a lot of information. So I was looking at this doji right there. And as soon as I seen this pin bar on the 1-minute chart right there, this is a small pin bar. We were looking higher, so we came up here, right? Had a small little mini breakout right there, right into VWAP. So I wasn't going to take that breakout because we were coming into VWAP. So we came up just past VWAP, and then we put in this doji. So as soon as I seen this doji, I checked my 5-minute. Same thing here. We had a doji on the 5-minute. Doji means indecision. And if you don't know what a doji is, it's the body is much smaller than the wicks. Basically, a doji will be formed something like this. You have the body of a candle, and then your wicks are going to be very large to the up and the down side. So a doji can be like this, or what you can do is you can have almost a non-existent body. And the idea is you're looking for wicks because we went up, got rejected, we went down, got rejected, and so we're at an indecision. And so as soon as I seen the doji on the 5-minute chart right here, I figured it was a good place to short it right below that. Same thing, I looked and I seen a rejection. This is like in an inverted pin bar. This is a rejection of higher prices right off of this VWAP level. So I actually missed my entry and the market from here. The entry was here. I actually missed it. I actually got in on this candle right here with a sell limit order at the white line. It broke through and then it came back up to retest it. And my stop was right above that candle. So let's draw this out. Let me go red. My stop was, let's see, my entry was at 28.45, which was here. And my stop was right above the high here. So this was my stop with a potential target. Let me switch colors. A potential target of right down here. So this is how my trade looked. This is a great risk reward. I'm risking 5 points to get, I don't know what I get, 28.45. So this is 5 points, 10 points, 15, 20. I got almost 25 points out of this. This was a long running trade. So how did I manage it? My management style for futures, first target is at 28.40, which is right about here. I got out on that candle. Second target is at 28.35, which filled me right there. And what I did was when it went 1-to-1, I went right to break even. So I went from having a stop here right to break even. So as soon as I got filled, it came down. I got filled. Then we retested, and it looked like it was going to stop me out, and then we dropped through. And then I got filled on this. We came up and retested, dropped some more, and then we came all the way back, and then I watched it roll over. So my final target was right here, 28.22. What I was waiting on, here we are, right about here. So what I was waiting is a break and I was expecting for it to come down, bounce higher, and then roll over. We failed the breakout once here. We failed the breakout once here. So on this final attempt to break lower, I ended up selling out right about there on this candle. So I risked 5 points. My first target was 5 points. My second target was 10 points. And my third target was about 23, 22 points, something like that. So this is how you do it. And on the 5-minute chart, it looked something like this. So you can tell that this was a very good risk to reward scenario. Here's my profit. And here is my risk. Okay. I hope this helps. I will delete all of this so you can see exactly where I took it. You could see all my fills. I went short 3 contracts. And then I took one here, and also one here. So not every trade goes like this. A lot of times what will happen is when it hits my target, my first target, I typically risk 5 points to get 5 points. Then I go to break even, make sure that it's a profitable trade regardless. A lot of times when it hits my first target, it'll come back up, stop me out, and then either roll over or go against me. But regardless, I got my first target and I made some money. I hope you're enjoying this. If you have any thoughts or comments, leave them down below. And if I get good feedback on this, I will do more of these. That's all for now. I will see you in the next video. I hope you enjoyed this video. If you did, hit the thumbs up button, telling the YouTube algorithm that you enjoyed it, that there's quality content in this video so it can get recommended and help more people. And also, if you don't want to miss the next episodes, hit the sub button, hit the bell icon. YouTube no longer recommends every video just because you're subbed. So if you don't hit that bell icon, you're going to miss videos. So if you're enjoying this and you want to follow along, go ahead and hit the thumbs up, hit the like button, and I'll see you in the next video.